Hi there. Have you come across words like stock, fund, bonds in a discussion and not have a clue what that means or refers to? Are you like this guy who likes to check out finance and investment forums but gets a brain freeze because of not understanding the terminology? Well, fear not. Even the guys on those forums don't really understand what they're talking about. Well, most of the time. Allow me to shed some light and, in a way, demystify the finance terminology and to explain concepts of finance in the simplest way I can. This is the first video of a series, so you can guess this pretty much is Finance 101 Intro to Finance. I will set the tone, slowly build up your knowledge, and in some time you would be equipped well enough to make your own financial decisions in a profitable manner. Oh, by the way, do subscribe if you like the smell of what I'm cooking here, to be updated in future, and throw in a like, helps out a lot. If there's something specific that you want me to cover, drop me a comment. I'll try to cover it in a future video. Now, with that out of the way, let's get to the real boring stuff. The building blocks of finance, which is accounting.
Whoa!
I know, I'm an accountant. Why is accounting so boring? Or rather, why are accountants so boring?
Are you crying? Am I crying? No, I'm not crying. You're crying.
Well, accounting is laborious, monotonous, and rigid. Restrictive in the sense that it appears that one has to do the same one thing in the same one way over and over again. It's like you get two flavors of an ice cream, but it's still an ice cream. It can't be a soft drink. But personal complaints aside, what is accounting? It is a system of maintaining records of all the transactions that have happened. Ever been in a situation where you had to recall and give account of some event that happened and it was a fair bit ago, like 2 days ago? Memory's all fuzzy. Now all you're doing is adding to the confusion, along with two or three other witnesses or participants who are providing conflicting stories about the same event. Just a waste of time. Well, wouldn't it be better if there were a record of the event? As you can imagine, it gets worse for businessmen if they don't keep written records of their transactions and contracts. This is where the system of accounting comes in. It gives a standard way of writing down everything that happened, usually with regards to money and inventory. You might have even come across this in old Hindi movies where you will see a munshi who will be sitting down next to the owner of the shop and writing down how much groceries who bought, how much is due to a customer whenever the shopkeeper wants to know, or how much money is lent to someone. One can even look for depictions in the movie The Accountant, but that movie is wildly dishonest to its name. Now, with the reason of accounting clear, let's get into it and understand what the basic terms are. Let's take a hypothetical guy, Roosh. He buys some apples at the convenience store. He paid for those with cash. Now this transaction has two parts to it. One is paying the cash. The other is getting the apples. To record this, Roosh would write in a book or a journal, and what he wrote would serve as an entry in the journal, so it's a journal entry. Simple. Now Roosh can just willy-nilly write that I bought apples for rupees 500. Or he can organize it and write it in a way that allows for easy future calculations. Let's say he writes in one line, debit apples 500. And in the other line, he writes credit cash 500. The debit shows that he now owns or has apples worth rupees 500, and the credit shows that he now has rupees 500 less with him. Now let's say Roosh has lent rupees 1000 to his friend Zlut, both Pune cars. So while recording for it, he will write credit cash 1000 as he has 1000 less of it, while he will debit Zlut, the person who owes Roosh, the sum of rupees 1000. Now Roosh likes this idea and then starts lending people left and right. Now, at the end of a month, he wants to know how much amount he had loaned to Zloot. He will have to go through pages upon pages to find every entry which involves Zloot, right? Tiresome? Obviously. So Big Brain Rouge comes up with an idea. He now starts to dedicate an entire sheet to transactions with a single person. Now, he can find all transactions with one guy in one place. And whenever he loans money, he debits the person. Whenever they pay up, be it of their own free will or at a gunpoint, he writes that down too. Then adds all the debits, subtracts all the credits, and now he has the total amount still due from this person. This is what the accountants call a ledger. Now, the actual act of keeping a book is rarely followed, or followed by very small scale or illegitimate businesses, but you didn't hear that from me. Most people now use softwares, which, as you can imagine, come from cheap, free softwares all the way to expensive ones. But it never hurts to know how to do it in case Skynet destroys all computers, right? What we learned so far is what is a journal entry and what is a ledger. Now we go a step further, and at the end of the month, Rouge wants to know all that happened with his money, the total money he has, how much is due, whatever happened to those apples he bought, someone ate it, someone shoved it up. The point is, he wants to know where he is at financially, what is his situation. One could ask, what is his financial position? We will cover this in a future video. Baby steps one at a time, my friends. So Rouge now checks his bank statement, and he sees that every time he spent money, his bank balance got debited. And every time money was deposited, his account got credited. Hang on a second. This weird fire guy on YouTube said, if I give someone cash, it should be a credit entry. What the hell is going on? Whew, well, boy Rouge, before you go suing the bank or me, you should know. Bank will debit and credit from their perspective. So when you get money, the bank is giving it to you. So it is a credit for the bank. When you spend money, the bank takes money from your account. So it is a debit. Now, names, characters, places, business events, locales, and incidents are either products of author's imagination or used fictitious manner in resemblance to actual person living, dead, or on Discord is purely coincidental. At the risk of this going too long, here's the bottom line. Basic principle in accounting is that anything that happens has at least two sides to it, both equal and opposite. Newton's third law in third person view, I guess. The two sides are debit and credit. And there's no restriction. Anything can be debited, anything can be credited. And I'm going to let you in on a little secret. You don't just randomly select what to debit and what to credit. There are three supposedly golden rules of accounting which help accountants determine what to debit, what to credit. It could even be a who to debit and who to credit, but hey, I'm not teaching you accounting, am I? But if you have to take one thing away, know this, that the more parts there are to a transaction, the more items, things, persons there are to debit and or credit. Just like when Rouge lent money to Zloot and then wrote down a note saying this is the rupees 1000 that he may never see again, he used a personal account for a person. Or when he bought apples, he used a real account. Or when he paid the YouTube accountant to do his accounting for a donation of $5, that is a nominal account because it's an expense. Do note that total of all debits and total of all credits in one event will always match each other. They have to be equal and opposite. That is a fact under double entry system of accounting. In large companies, hundreds of accountants record thousands of transactions daily. And then at the end of a month, 3 months, they prepare periodic accounts or financial statements. Then every few months, a guy called auditor comes in and says, hey man, you messed up this one transaction from 2 months ago. Now here, we got these 800 entries to fix it. Also, here's the audit bill of rupees 50,000. Now the accountant's frustration is at no end. The accountant tells the auditor to sort off. then his frustration is at no end. That's pretty much the relationship of an accountant and that of an auditor. Now, if for one moment you thought that this was a meme, well, you have no idea. The number of transactions, ledger accounts, journals can be so large that it becomes hard to even spot a mistake. Some accountants will record entries for events that did not happen, and then they record conflicting or cancelling entries to remove the effect of those earlier entries and then bloat all the accounts up. One thing leads to another, and you get Enron Satyam type scandals. Now, if you're someone who is, or wants to be, or someone not related to accounting or finance, why should you care? I mean, why do doctors, policemen, engineers, IT professionals, social justice warriors, communists need to care? Well, you do care about your money, right? And ever felt the need to manage it? Then this series can be helpful for you. For instance, money has value, right? Duh, it's important for me to buy bread and stuff, so yeah, it's value for me. No. Not value as in the abstract nature of it being important for your livelihood. I mean, it has relative value. It is scarce. And our money, our currency has its own value. There's an exchange rate. $1 for rupees 75 or €1 for rupees 85. Now do not start thinking, hey, weirdo on YouTube, I don't need US dollars to buy bread. Well, no. But actually, yes. We do buy oil and other commodities from other countries, and everything comes at a cost. You see, as value of a currency changes, with it will change its power of buying goods like bread. If rupee value falls, the bread prices will start rising. Then would you still not be affected? 10 years ago, $1 was worth rupees 50. Now it's worth rupees 75. So the value of money has fallen. Clearly. And with this fall, everything you buy with rupees has become expensive. Now, if 10 years ago you had 10,000 in a savings bank account, in a bank that paid 4% annual interest, you would have in your bank account right now about 14,233. If you had dollars, you would have rupees 15,000 now. And this is what 10,000 should have been. Now, currency value is not the only thing that affects the ability of money to buy stuff or purchasing power, but I'm using that as an example for demonstration here. There's inflation, there's tax, there's interest rates, there's so many other things that affect the purchasing power of a currency. But hey, I'm not saying you need to be an expert on all of this, but at the very least, you must realize that there's so much that affects you without even you knowing. Think of it this way. If you had locked 10,000 in a savings account that paid 4% interest annually after 10 years, you would have 14,233, roughly a 42% gain over a period of 10 years. But man, what you could buy with 10,000 10 years ago, to buy the same items today, you need about 15,000. So you've lost 5% or 767 in reality. Think about it. Accounting is recording what has happened. Economics is about understanding why it happened. And finance is about using these two to your advantage and grow your money. No one likes to lose money. Spend money, yes, but lose it? Pretty rare to find someone who enjoys it. The game called investing is when you make money using the money that you already have. In this series, I will share the very basic knowledge that will enable just about anyone to understand the jargon that is usually thrown around by brokers, bankers, lawyers, neighbors. The aim is to help anyone who doesn't know accounting or finance or economics but wants to make money using their savings in a way that doesn't compromise their current livelihood and have a good sum of money saved up before retirement or just for your future self or when you want to buy a gaming rig with NVIDIA 40 series. Aim to cover even the most complex of financial instruments like derivatives such as calls, puts, or simple stuff like stock, share, bonds. The idea is to get familiar with all the choices of investment available to an individual and equip yourself with the knowledge to use them wisely. That's all for today. The next episode will be on income statement. Thank you for watching.